Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, November 18th. Hope you guys had a wonderful weekend and great start to the week here. We do got actually just one item here on the economic calendar, and that is a home builders index. This is the confidence level for home builders, and which is pretty important because we want to see if they are confident to start building more homes. So it kind of gives us a prelude to housing if you kind of if one thinks, because they do a lot of obviously research before they start planning and building. So the previous reporting back in October was a 71, and it came slightly down to 70. So they weren't as optimistic, but still, it's still pretty good territory here. They weren't like really pessimistic or anything, but they are kind of obviously watching things move. Obviously, the whole China situation is putting a lot of things in flux. And speaking of such, stocks are down because China's feeling a little pessimistic after the comments that Trump made last week on Friday that uh, the resistance and the pushback on the rollback of the tariffs, that's kind of got them kind of a sour mood in China. And of course, that's kind of, they're still talking back and forth, but pessimism is kind of growing in terms of a deal getting done between the two countries at any time now. And then also with the impeachment hearings and also election coming up, they may kind of choose to kind of hold off and wait and see if anything changes in the meantime. So they may kind of pull back a little bit and not want to give up a whole lot. Uh, Especially with the election coming up next year. And then, of course, we got these impeachment hearings going on. So they may kind of try to play a bit of hardball themselves. So let's kind of jump ahead here to the uh, bond market. Bond market is up. We're just passing. We passed all those day, moving day averages from the 50, 25, and 100-day moving averages. We're going up to our next stop here, which is the Fibonacci level here. We're just a hair above it. It's trying to stay above it right now. Currently up 19 basis points. It did hit 22 a few moments ago, and it's pulled back a little bit. So we're trying to stay above this line here. If we can stay above it, we got a little bit more room to grow even further, which will be nice. We'll be back to the levels we saw middle of last month, or actually early last month in October here. So hopefully we can stay above this and break above further here. On the yield side, we can see it's dropping a little bit down here. We got a double floor of support. As you can see here, we got the 25-day moving average and we got the 100-day moving average here kind of joining as a double floor of support for it. So it's going to be a little tough. Plus, just a little bit below that, you got the Fibonacci level. And so it's going to have a kind of a triple, actually, floor of support. So we'll see if yields are able to remain above that. Currently it's sitting about 1.8 right now. And so again, rates are a little bit better today. So as a result, so we are above that 12 basis points that usually takes for a change in pricing. So mortgage rates are a little bit better today. If you guys are looking to buy a refinance in California, I'd love to hear from you guys. I am a senior mortgage planner with Pinnacle Home Loans, and we do offer quite a variety of home. We work with a lot of different investors, so we have a lot of different loan programs, so we can give you the best solution for your scenario. Please go ahead and direct message me or email me, and certainly the best way to reach me is email of the two. Those are the two best ways to reach me. All right, folks, you guys have a great rest of your day. We'll definitely get back to you tomorrow. Thanks so much for watching. Bye-bye.